HDFC Bank, and finally the decks are cleared for this mega merger to go through. Ankur, can we say finally the decks are cleared and the order is likely to be uploaded, because it kept us waiting last time and it's been 10 days and we're waiting and waiting and waiting and waiting.
Yes, finally, NCLT has approved HDFC and HDFC Bank merger. Remember, last time the judge had reserved the order, and thereby there was a wait of whether or not this merger is going to be approved. Finally, now NCLT has cleared it, and after that, the company has to file an application in ROC. Now, there is a catch here. The lawyer which was representing HDFC Investments had requested judge that they should be given time of 180 days, meaning 6 months for filing to ROC. However, in normal course of scenario, 1 month is given. So that argument still went on, and the lawyer had requested judge that they should be given the time till 30 days for refiling that application. So that may happen side by side, whether or not it is going to be filed in 30 days or 180 days. But for now, the decks are cleared for HDFC and HDFC Bank merger from NCLT, and the court has approved the merger.
Thanks very much, Ankur. It's finally a done deal that the merger has been approved. A quick check-in as to how the stock price is reacting. That's HDFC Bank for you. Definitely seeing some sort of a reaction after the news has been declared. And you've also got an HDFC, which is in the green. Rahul Malani as well is joining us from BNP Paribas. Rahul, after a few, roadblocks, finally we've seen the approval come through for HDFC and HDFC Bank's merger. Just wanted to get in your initial thoughts.
So, good afternoon, first of all. So, the news is coming as a positive read-through for the stock. So, basically, see, now we await hearing from the RBI anytime soon on the dispensation. And based on the regulatory dispensation, it would be easier to build the next stage of investment thesis. And so clarity upon the regulatory dispensation becomes a critical in this period to build some conviction here. Because the liability side transition would need some hand-holding here, as management is working through the assumption of grandfathering of the liabilities, and the quantum is still quite high. So we must wait as the transition begins to assess the impact on the CASA ratio as well as NIMs, as it is harder to forecast the impact of it today. While at the same time, management has argued on the ROA and ROA metrics as a better measure. It is important to note that there would be an impact on the NIM, but would be offset with the superior cost structure and lower credit cost that is inherent in the housing loan portfolio. So currently, we believe that the merger would lead to dilution in ROA around 10 to 15 basis points in near term, but ROE will still remain way ahead of above the cost of capital, despite some compression in the ROAs. And if you look at the stock, this is trading at 30% discount to its long-term valuation multiple, despite no slowdown in the growth paddles, just due to the merger as the merger was impending. So as far as the risk of the standalone business is concerned, it appears to be quite low given the business performance is holding up well. So we believe strong execution in the coming quarters after the merger could lead to some re-rating in the stock. Because at present, regulatory dispensation will be critical to assess the investment thesis going forward.
All right, Rahul, appreciate your time. Very comprehensively answered. One answer in a sense captured all the basic important aspects you need to consider.